G'day everyone, welcome to the weekly general update for the 18th and 19th of August. And we've certainly seen a fairly significant week just gone by. In the Australian market, we've had the banks and telcos moving up for about the last 6 or 7 weeks, but the rest of the market was being very much left behind, and that was purely a safe haven trade, I believe, by overseas investors that were looking for better yields. But in the last week and a half, we've really seen the Australian market turn up quite sharply. The resources have started to do a lot better. There's a lot of oversold quality resource companies that are turning up. And we've seen the telecommunications companies come off a bit. We saw the banks certainly dip for a few days as money started coming out of that safe haven trade and started looking for a bit more return and a bit more risk. So a pretty interesting week just gone by, and I really think that it just cements what I've been saying now for a couple of weeks, that I think we're going to have a generally more positive period through to the end of the year. Now, let's just quick reminder, the information in this video is general advice only. So a quick summary of the week. The S&P gained another 13 points. I think it was 15 points last week, so it's consistently moving higher. Still looking at 1422 as being an obvious resistance area, given that markets tend to overrun these levels a little bit with all the manipulation that goes on. Wouldn't be surprised to see another 10 points on top of that, but then I would expect some kind of pullback, because it's been quite a while since there's been any sell down in the US market at all, but I'm not expecting it to be anything of any great substance. The ASX 200, it ended up gaining 93 points on the week. It had a really big week and solidly outperformed the US for the first time in a long time, and that was mainly on the back of resource stocks starting to turn up. The reporting season in Australia has been somewhat mixed, but what's been really noticeable is that stocks that have beaten their market expectations or have come out with a fairly positive future outlook have been rewarded with significant price gaps to the upside, whereas stocks that have disappointed, even by a little bit, have been absolutely hammered and have gapped significantly to the downside. So we've certainly seen some very exaggerated moves coming out of the reporting season. But I think generally it's been not too bad. There haven't been a huge number of misses. So the strategy going forward is definitely about buying the dips in the Australian market, that's for sure. Now the US dollar index, euro, etc., there was really very little movement on currency markets during last week. We'll have a quick look at the chart of the euro, but not really much to talk about there. And I think it's mainly because the feeling is that Europe's immediate financial crisis is probably over. Bond yields came down, which is a good sign. Spanish yields down to 6.44. If you recall, they're up around about 7.3 at one stage. And the Italian yields too, which is really important, are now back down below 6, which is also a good sign. Gold ended up losing $3 on the week, and we're still in this very frustrating tight range between 1550 and 1650. It is going to break one way or the other, and when it does, the move's going to be explosive. I would say it's 80% chance of going to the upside, but there is a possibility that it could do a fake breakout to the downside. So, don't be completely of the opinion that gold must go to the upside. I believe in the longer term it will, but in the very short term, the explosive move could go either way. Now the HUI index, which is the most widely observed gold index around the world, continues to trend higher, so that's very positive, and again another supportive reason why I think gold will break to the upside. You need to watch silver as well, because I think there's a breakout imminent on silver, and traditionally silver percentage-wise moves much faster than gold does. So there could be some very significant moves there in silver. Copper was up a little bit, still holding pretty robustly in this 330 to 350 area, so that's a good sign. And oil also finished the week fairly strongly, up at $96. So let's have a look at a few charts. Now, this is the first one I want to look at for a change, and this is one of the reasons why I believe money printing is a given. This is the 30-year Treasury bond yield in the US. Now, you can see it's come down from very, very significant highs, up around about 5%, which was in June of 2009, and there's been an active campaign by the US Fed to push the 30-year bond yields down as low as they can, because that directly feeds into the US mortgage market, which they obviously want lower cost loans to try and kickstart the housing market in the States. So the Fed's been very successful in pushing this down. It was only March of this year, it was 3.5%. They've managed to push it down to under 2.5%. But you'll notice in the last couple of weeks, it started spiking back up again. And for the first time in quite a while, we've got the moving averages now having crossed, and they're starting to open out. Now, I can't believe, given all the things that the Fed have done in recent years, that they will not take some sort of steps to push that back down again, and that comes about by monetary stimulus in one form or another, and that's got to be positive for gold, or I can't see how it could be negative for gold. So again, that's another main reason why I'm 80% that gold will break to the upside. And when we look at the gold chart, you'll see what I mean about why we can expect an explosive move rather than a progressive move. Let's have a look at the S&P. It's been a strong run, and we're still heading higher. We're getting up towards this 1422 area, but it just keeps grinding its way further upwards. It's getting to overbought now. We've finally closed up at 70, so that's why I think a little pullback might just be something like we saw back here in the mid to late July, where the market just pulls back 3 or 4 days. But that's the opportunity you need to be looking for to buy into the dips. You also want to have a look at some of the internals in the US market as well. This is the Russell 2000 index, which is the small to mid-cap stocks. And you can see it's also doing extremely well, not that far off its all-time highs, and definitely working higher in recent weeks. If the US market was about to fall apart and was only being held up by the major stocks, and therefore making the S&P index look better, you wouldn't see the Russell doing what it's doing. So to me, this is another very positive sign about the buying momentum behind the US market, the fact that the smaller stocks are doing so well. Let's have a look at the euro. As you can see, virtually no change on the week in the euro. Have a look at our market, and we had 2 very strong days to finish the week, both up around about the 50 to 60 point mark. So we've now broken out of this broadening triangle we had, and I'm looking for some resistance around about this 44.50 mark. We're currently 43.70, so that's about another 80 points. We could easily get there in a couple of days, the way the market is going at the moment. So look for some resistance in the Australian market around about that area. Let's have a look at the actual sectors themselves. Energy has broken out about 7 or 8 trading days ago, and is now just popped its head above this previous peak from the 29th of May, and is just starting to head higher. That's been quite a consistent trend. Finance index has been running for a lot longer, and I would think that there's probably not too much more in the banking index, because while the risk trade comes back on, more money is going to be looking to head into resource stocks. And this is the resource sector. It hasn't really got into gear yet, because whilst we've seen some pretty good moves amongst some of the mid-cap stocks, in resources. We're really yet to see BHP and Rio kick in, and I think that's really a function of concerns over China. But if Rio and BHP really start to crank up, then we're going to see our index go significantly higher. Now let's just look at the small caps, also a good sign for our market. You can see in the final 2 days of last week, and particularly Friday, we've had a real acceleration in the small caps index, and we're now back at short to medium term highs. So clearly the small cap sector has turned up as well. Now let's have a look at gold first of all on a look at gold on a weekly basis. So you can see we had the 34-month rally from 2009. We're now into the 11th month of consolidation on a big picture view. So you can see we've got a wedge here. It's looking to me like it could be a continuation wedge, so it should break to the upside. And then within that we've got a smaller wedge that's been this last 15 weeks of price action that you can see is getting tighter and tighter. Now another reason for my expectation of the upside is that we're getting higher lows all the way through this little wedge. That see the tops are about the same, around about the 1630, 1635 mark, but the lows are getting higher. So again, I'm expecting that we will see a move to the upside in gold. But as I said, a fake out to the downside, maybe down to 1450, is possible. So don't get too excited about gold at this stage. Now let's have a look at silver. This is silver on a daily chart. You can see similarly a very tight wedge which has got rising lows, and when silver goes, it's going to go very hard, I expect. We pan back a bit and have a look at the last time that silver really took off. We go back here to August of 2010, so exactly 2 years ago. Silver was trading at $18, and it went from $18 to $50 in the space of about 8 months. So silver tends to move in a fairly explosive sort of manner. And finally I want to take a look at the HUI index, which is it's the major gold stocks. And you can see we've had a good move. We've retraced about 78.6% of it, which is a little bit deeper than what I would have liked to have seen. But clearly now we're forming higher highs and higher lows on a short-term basis. So certainly gold stocks looking quite good. So this is the copper chart, 6-month spot copper, and just finally to look at the overall scenario. As I said, I'm expecting a pullback in the next week or so, and then a bit of a run higher. I'm then expecting that we'll probably see some kind of deeper correction in October, because October or somewhere around about that time span, because I just can't see that the market is just going to keep going higher all the way into the US elections. It just tends to not work that way. But then I would expect a further advance into the year end. So looking at the current trading, it's really a case of definitely buying the dips. That's a pretty open and shut strategy, and I really think, given what's happened in the last week or 10 days, that if you've been holding back a little bit on your trading, then this is definitely the time to be going for it. So that's it for this weekend. Cheers.